Hi everyone. Let's begin with a chapter which is chapter 5 of your material, and here the title of the chapter is Audit Evidence, and through this we will be learning basically the find it series standards, which are 6 in number, like you can see it on the screen: SF500, SF501, SF505, SF510, SF530, SF550. Now all these standards you have already studied at Inter. So there is nothing new that you are going to learn. It's all about refreshing your knowledge on what you have studied at Inter, and then try to apply the knowledge that you have gained in the form of your case studies. So the basic focus here is application of knowledge rather than learning the content. The learning the content you already did it at your intermediate. So here it's all about the application, and keeping that point in mind, even if you have a look at how the ICI material is structured, what you're seeing is ICI material. Now SF500 audit evidence. He has just given the basics. What do you mean by audit evidence? And then the entire standard, he has just given a executive summary of it. So almost one single flowchart he has given. What is the scope of it, what is the objective, and what information you will use it as an audit evidence, and then what are the audit procedures you perform to get it, and what do you do if there is inconsistency. That's all. So that is what he has given. And then for your understanding, he has given one small case study, and then he moves on to another standard. And this is how all the standards are structured here. So it is like basically has given a standard and a small this flowchart which will detail the contents of it, and then one or two test for your understanding questions and all that, and then moves on. So what I'm trying to summarize here is, at this stage of final, in this chapter, audit evidence, though you are going to touch all 6 standards, but you will not be, in the material is not given anything. So he is expecting that you remember what you have learned at your intermediate, and then he gets on directly to this case study. So, but since there is a long gap, let's be honest, since there is a long gap, I am not sure how many of you were comfortable in recollecting. So therefore, let's go back to our material. So I've just summarized, and let us touch the basics, that is, which will help us to remember all the basic content, and then we'll move on with this case studies and the examples, etc., and all this. So this is our material, so on which the copy of it I will share it with you. Now in this audit evidence, the same one like we have seen it in the institute material, we would be covering all these 6 standards. Now let's look at SF500. SF500 deals with audit evidence. Then the first thing that we need to know is, what do you mean by audit evidence? Now when you use the word audit evidence, it's a basic one you've already studied, but it's just a recap of it. Now it refers to the information used by the auditor in arriving at conclusions. And conclusions on which conclusions? What is that auditor is going to do? Those conclusions on which the audit opinion is based. So definition is not important, but one small point that can come in the examination is, what is the relationship between opinion and evidence? Say these two are the two things. Like say one is opinion, this is word number 1, and the other one is evidence. Now what is the relationship between them? So the relationship is simple. Your opinion is based on evidence. So if you are indirectly, he tries to emphasize, if you have not gathered proper audit evidence, then the opinion that you are going to form may not be proper. So to that extent, the two, putting it in the same different way, if you want to form a true opinion, if you want to form an honest and true opinion, then you should have collected the proper evidence. So that is the premise on which this entire standard talks about. And this statement will highlight, why do we need to study about this evidence, and what are the methods that are there to obtain this audit evidence, and in that process, what do I do if there are any inconsistencies? So these are the 3 angles that we would be covering into it. Now let's come back here. So we have covered this meaning. So meaning is simple. It refers to the information. What is an audit evidence? It's nothing but the information used by the auditor for arriving at conclusions. Which conclusions? The conclusions on which he is going to base his opinion. Now, what are the sources? Now, when this evidence is so important, so because of its effect on the opinion, then comes the question, where from I get this audit evidence? Now, since we are the finance professionals and we basically restrict our verification to the books of accounts, that is where this question comes. Can we say that the audit evidence that is obtained by the auditor will originate only from accounting records, because that is our the one which will decide what we start with and what we end with is accounting records. That is where this question comes in, whether our audit evidence purely comes from this accounting records. That is where this standard highlights that audit evidence doesn't come only from accounting records, it even comes from other information. The same one, hope you would be able to recollect your inter-discussion. Where from? What are the source? Few things will come from accounting records and few things come from your other information. Now, what will come from accounting records? Your accounting entries and invoices, contracts, subsidiary ledgers, supporting records. You can write many things. So, in the accounting records, you can say debit notes, credit notes, everything you can write. The agreements that you enter, that's what he's calling it indirectly as a contract and all that. So, everything, all accounting records is something based on which we gather this audit evidence. Apart from that, what is the other information that is other than the accounting information, but which we would be gathering this audit evidence, which is going to help us in our forming audit opinion? One is the minutes, second is written confirmation, and third one is the manuals. So these three are the examples, not that the list is exhaustive, this list is example. So this whole this flow chart, what it tries to summarize, the evidence which is so important and which is having impact on the opinion will come from not only accounting records but also from other information. That is the better way how we can study this. Then, what is the scope of this SA 500? What it covers? All that it says is whatever the audit evidence that you are gathering, that should be sufficient and that should be appropriate. That is why we use that word, sufficient, appropriate audit evidence. Then comes the question, what do you mean by sufficiency? What do you mean by appropriateness? And apart from these two words, the standard also covers how do we ensure the reliability of audit evidence. You gather the information from accounting records or other information, but how do you rely on that information? And how do you evaluate whatever the reliable audit evidence you have gathered? How do you evaluate so that you can use that evaluation for your opinion? So these are the points on which this is like C category, let me be honest, and this you can mark it as a B category. There is a possibility of question to come, and of course this one you can mark it as a category, in the sense not that you will be getting anything on direct question like what do you mean by audit evidence. At this stage you won't get it, but you can use this as an introduction to start any answer, be it the case study or be it a case scenario, whichever it is. You can use this definition to demonstrate your basic understanding. Then let's move on. What is the objective of auditor? As I said, the objective of the auditor is simple, to gather that evidence which is sufficient and appropriate. Then what do I mean by sufficient? Sufficiency refers to quantity, and that is what it says. Sufficiency refers to quantity and appropriateness refers to quality. So on this, again, if we go back and see, he is asking the questions. Let's say this is an MCQ, though this is a basic one, but whatever it is, when it is also a part of final syllabus, we must cover this as well. Which of the following best captures the relationship between sufficiency and appropriateness of audit evidence? Then he has given sufficiency deals with quality. Here itself you know it, sufficiency doesn't deal with quality. So this option is ruled out. And then appropriateness refers to relevance and reliability, whereas sufficiency refers to quantity. Now this appears to be correct, but let us follow the elimination method, because that is the best method which will protect you in your answering MCQs. Then the third one, appropriateness is required only for external confirmation, so which is incorrect. Straight away you can mark it as incorrect. Then the sufficiency and appropriateness are unrelated concepts under SA 500. No, these are the this is the primary concept, and this is what will decide the scope of it. So therefore this is also wrong. So under elimination method, you are more sure that appropriateness refers to relevance and reliability, and sufficiency refers to quantity. So therefore your final answer is B. So simple one, but we are just discussing it. Then whatever the audit evidence that you are gathering, the standard says that that should be first relevant and it should be reliable. That is where we get further into how do I know that whatever is the audit evidence that I am gathering, that is whatever the evidence that I am collecting, how do I know that that is reliable? That is where we have certain rules on reliability, which I am sure you have studied it in depth at your inter. Mark this as a category item, and going back to it, this also mark it as a category item. Now this one you can mark it as a C category. This is only the backup one, but directly it may not be the important for you to cover it. Now how do we? It's all about reliability. So how do I know that audit evidence is reliable? Now it depends on these things. Any audit evidence obtained from independent sources, independent external sources, is always reliable, more reliable than internal sources. So here the catchy word is external. So anything that you gather through external sources is more reliable than the internal sources. Then the second point, any audit evidence which is generated under effective control. That is, if the internal controls are effective, the buzzword is controls. If the controls are effective, then any evidence that you gather in such an environment is more reliable. Since you are already familiar, I go a little fast here. And anything obtained directly by the auditor, meaning the auditor is directly gathering this evidence from the third parties rather than the client collecting it and then forwarding it to the auditor. Because in that process, like say, what is not permitted here is, let's say, this third party is confirming to the client and the client is further confirming to the auditor. So in this is not so reliable. So what they say is, any evidence that is obtained directly by the auditor from the third party is more reliable than given to the client and then come to the auditor, because in this there are chances that information can get compromised. So that is what is the small point. Then let's move on. Anything which is documentary, so is more reliable than the oral evidence. So these are the four sources. To talk about it, go back. When the evidence becomes more reliable, if it is obtained from external sources, and when the internal controls are strong, and when obtained directly by the auditor, and then the documentary evidence is more reliable than when it is in oral format of it. So this is what is the basic reliability rules of it. Then let us move on. Then last two paragraphs. How do you gather your audit evidence? What are the audit procedures? If you correctly recall, we would have discussed long procedures like the 7 procedures: inspection, observation, external confirmation, recalculation, reperformance, so etc., analytical procedures and inquiry and all. But instead of that is a lengthy one. But to put that, whatever you are doing, it is basically the audit procedures are of two type. Either it's a risk assessment procedure or further audit procedures. So just to help you recall, now this chart will help you recollect what are the types of audit procedures. So the audit procedures are, first is risk assessment procedures and then other procedures. This other procedures is of two types: test of controls and substantive procedures. This substantive procedure is divided into two types, test of details and analytical procedures. This is why these analytical procedures are also called substantive analytical procedures. We will get into it a little later. And then final leg of it is test of transactions, that is nothing but vouching, and then this test of balances, which is verification. So, indirectly he is talking about these two things. How do I gather my audit evidence? You gather your audit evidence through two broad procedures. Either it is a risk assessment procedure or other procedure, which includes all these steps of it. That is what he is trying to talk about it, where in the diagram it is very clear, this is further divided into it. And then the last leg of it. What do you do if there is an inconsistency or you get any doubt on the audit evidence? When evidence appears inconsistent or unreliable, the auditor should perform three things. First, investigate the inconsistency. Why that inconsistency has come? Investigate. And second one, perform additional procedures, because the initial one is not giving you the comfort, then perform additional procedures. And with that additional procedures, you would have gathered little more information. With that information, then reassess the reliability of audit evidence. So, this is what we need to do. So, to go back to get hold on the small concept, what do you mean by audit evidence? It is an information used by the auditor for arriving at conclusion. What's the relationship between opinion and audit evidence, which is based on what? Your opinion is based on the audit evidence. That is why your evidence is not proper, then opinion will not be proper. So, that is why all our efforts to see that the evidence that you are gathering is more reliable. Then where from I get my audit evidence? In a quick rapid mode of revision, you gather your audit evidence through two sources. Not that it doesn't come entirely from accounting records, and it also comes from other information. And all this, whatever we have talked about, are the examples. The list is not exhaustive. Now, then comes the question, what do you mean by sufficient and appropriate audit evidence? So, sufficiency refers to quantity and appropriateness refers to quality. But as an auditor, I must make sure that the audit evidence that I am gathering is not only sufficient but also appropriate. And then, how do I rely on the audit evidence? That would depend. The rules are simple. Any evidence that you obtain from external source is more reliable than internal source. Effective controls will give you more evidence, more reliable evidence than ineffective controls, and directly by the auditor than the client obtaining it and then forwarding it to the auditor, and anything documentary. In this, actually at inter level, this statement was important from MCQ. There was a little additional statement, that is, any information obtained by external sources is more reliable. But then can I say that external sources are always reliable? No, that is not. Then when any information from external sources is more reliable, then as an auditor, why do I collect even this internal audit evidence? That's where one backup golden rule was, external evidence is more reliable than internal evidence. But that doesn't mean that external evidence is always reliable. So, that is where as an auditor, we should gather both external evidence, internal evidence, and then try to reassess and then try to map these two to see whether it makes any difference in it. So, this is all about audit evidence. But if you look at the questions in this are basically to test on your expert. So, now let us look at it. That is not given directly as a part of summary, but expert. Who is an expert? Hope you all are aware of this basic definition. Expert is a person who is having expertise in fields other than accounting and auditing. So, other than accounting and auditing, any person, any association, any institution or a person, whoever possesses that expertise knowledge is in fields other than accounting or auditing. Why are we excluding accounting and auditing? With regard to accounts and auditing, CA himself, the chartered accountant, the auditor himself is an expert. So, there is no need for him to rely on any other person. If the matter relates to accounting or auditing, he himself can judge it. But if the matter relates to anything other than this, then he may have to take the expert knowledge. That is why we use the word other than. Now, these experts are of two types, management expert auditor's expert. Management expert is the one who is appointed by the management. Auditor's expert, as the nomenclature suggests, is the one who is appointed by the auditor. That is, the auditor himself is taking the views of an expert, but here based on the auditor's request or the management on their own, they are getting it. So, this expert is appointed by the management. Obviously, who would be more reliable? Auditor's expert is more reliable. So, he is more reliable than management expert for an auditor. But in reality, management expert, generally the management itself would appoint this expert. So, then as an auditor, I can't judge that matter because it requires expertise in fields other than where I am professional. And the critical point here is that expert is appointed by the management. So, can I rely? That is the question. So, this is what is that whole essence of this. Can I rely on the management expert? On auditor expert you can rely. If you don't trust that person, you wouldn't have approached him. So, auditor's expert you are confident. All your query is on the management expert. You can rely on management expert, but only, that is, blind reliance is not permitted, and before relying on auditors, you should have performed these three things. That is, check the competence and capabilities of that expert, understand the work done by him, and then see the relevance of the work to your audit. And if you are convinced with all this, then you can rely, otherwise you cannot rely on this management expert. So, this is where you have been questioned. Like if you see the study material, when I say SM, we are talking about study material, the objectivity of the management expert is likely to be lesser. When it will be lesser? When the expert is competent? No, this won't appear to be wrong. Then expert is capable? No, this is also correct. And the expert has relevant experience? All 3 points are correct. So, therefore, even under elimination, we are left with only D, but let us reassure. The expert is employed by the entity. Obviously, if the expert is employed by the entity, there is no independence to it. So, any report given by the management expert, auditor will have to look at it with the same discounted nature. So, that is where now the answer is, because he is talking about which is less reliable. So, then the objectivity where it is getting. So, this is the answer for the question. Then let us look at, see this one. An auditor obtains a bank information directly from the bank and compares it with the, so this word is important, is auditor is collecting directly from the bank and compares it with the entity's ledger. Now, which principle best explains why this evidence generally more reliable? Why is it more reliable? Because the auditor is obtaining directly. That is what is the rule that we have studied about the reliability of audit evidence. Now, look at this. ICI, test your understanding. With this, we will be done with SA 500. Now, under this, the auditor of BBNS Limited accepted the gratuity liability valuation based on a certificate issued by the actuary. So, this actuary, qualified actuary, is an expert for you. Now, however, the auditor noticed that retirement age adopted is 65 years as against the existing retirement age of 60 years. So, in the report, they have considered the retirement age as 65, but as per the policy of the company, it is 60 years. So, the assumptions are wrong. So, when the assumptions are wrong, that is where it will come. Now, did you understand the work? So, what he did it. Now, here you realize that the assumptions that he had considered are not proper. So, therefore, when the assumptions are not proper, you can't rely on that work. So, therefore, here in this case, auditor should not rely on this for simple reason, the assumptions are incorrect, inappropriate. So, this is what is your SA 500. So, to summarize, mostly you get the questions on the concept, particularly on two aspects. One is on reliability angle and the other one is the expert angle. If you are good with that, then you are done with this standard. So, this is about your SA 500, and then we will move on with the next. Yeah. So, let us continue with this next standard. SA 501, again it deals with audit evidence. Then the difference between this SA 500 and 501 is SA 500 deals with audit evidence in general cases, whereas this SA 501 deals with selected items. So, only for selected items. Then what are those selected items? There are three: inventory, litigation and claims, and a segment information. Then what is the objective of the auditor with regard to these three? Let us look at the summary of it. The entire objective of SA 501 is to gather SAAE, that is your sufficient appropriate audit evidence regarding inventory, litigation and claims, and segment information. But what is the objective with regard to inventory? To ensure its existence and condition of it. And with regard to litigation, whether the entity had disclosed all the litigation, that is the completeness of it, all would mean completeness, and segment information, which is required as per the specific standards, accounting standards. So, therefore, as an auditor, how is it presented and what are the disclosures, whether they are in proper with the compliance of it. So, these are the three selected items: inventory, litigation and claims, and the segment, and this is the objective of it. This is a small standard and an easy standard. You need not worry. There are selective questions which he is asking about it. I will get into it. Then with regard to the inventory, what is that auditor should do? Now, whether in this, the bigger point from conceptually is about fiscal verification. That is, who will have to conduct this fiscal verification and what is the auditor's responsibility towards fiscal verification. Now, let us look at a small chart so that conceptually you will get the clarity of it. Whose responsibility it is to conduct the fiscal verification? Then we talk about, or we look at it from the management perspective and auditor perspective, and management is responsible to conduct the fiscal verification. So, predominantly whose responsibility it is to conduct the fiscal verification? It is basically the management responsibility. Then what is the auditor's role? The auditor's role is to ensure that the management has conducted the fiscal verification. But how do I know that the management has conducted? That is where it becomes necessary for auditor to attend the fiscal verification. To summarize the probable MCQ, is it mandatory for the auditor to attend fiscal verification? The answer is yes, unless it is impracticable. Then what an auditor should do if it is impracticable? We will get into it little later. Then here comes the question. At one hand, we say it is the management who will have to conduct the verification. Then again, auditor must attend. When the management is conducting the verification, what is that auditor has to do with that? Why he should physically attend? So, all this we talk about why of it. Say, when you say when the management is already conducting, then why the auditor again? Why he should attend? So, that is what we are trying to answer. First one, to evaluate the management's instructions. That is, for conducting fiscal verification, if any instructions has been set by the management, the auditor should evaluate and the auditor should see whether the management instructions have been complied with. Now, mark it as A category for this item from exam perspective, particularly this one piece, that is where I have marked it with 1 star, and mark this as A category. On this point alone, you are getting case study questions. So, I will show you the questions, how is he asking. So, point 1 is to evaluate the management instruction. Second one, observe count procedure. So, how are they doing it? That he has to observe. So, this is the second reason. Third one, inspect the inventory. Why he should inspect? Because this is what is the objective of the auditor when he is doing it. So, the condition of it and whether the inventory exists. So, therefore, he will inspect the inventory to see this and to perform test counts, because the management is counting it, but the auditor also will perform the test counts to see and compare with the counts that are already taken by the management. So, these are all the reasons why the auditor would be performing this one. Then comes the question. Going back to it, is it mandatory? So, this point also from exam perspective, take this as 1 star. Is it mandatory for auditor to attend this fiscal verification? Yes, attendance is mandatory. Attendance is mandatory unless impracticable. Impracticable. then it has become impracticable. Let's say there is a situation of floods or anything of that sort, or there is a uh, little blast, a furnace blast, or anything like industrial accidents, anything of that sort, or there is an unrest in the within the company due to some labor issues or something like that, or in that area the company is fine, but in that area there are some fights, there are some riots, this kind of stuff, or there is a curfew which is going on, any such impracticability for the auditor, then what he should do, that is what is this one. Now for this point, from exam perspective, mark this with 3 stars and mark it as a category. You must learn this. Then what an auditor should do? If it has become impracticable, then auditor should try to perform alternate procedures. Because it has become impracticable, auditor should see whether he can perform any alternate procedures. If that is possible, he will continue. But what if these alternate procedures are also not possible, then the auditor will evaluate the impact and then modify it. So, ideally, it is like what an auditor should do if attendance becomes impracticable. First, perform alternate procedures. This is step number 1. If these alternate procedures are not possible, if it is possible, it is okay. He will perform and conclude. If this is not possible, then evaluate the impact. Because he couldn't do it, what is the impact of not verifying this item? How important is this item? How significant is this item from the materiality? And based on your decision, modify if required. So, modify the audit report. So, these are the 3 steps the auditor would be performing with regard to it. Now, before I move forward, I would like to show you the questions, but since there is only one small aspect of it, we will cover this aspect also and then go back to it. Now, I need to take you to the link. We said attending the physical inventory count is mandatory for auditor. That is, the physical verification is mandatory. But if you look at certain industries, their inventory will be with the third parties. So, that is where a question would arise. What if my inventory is with the third parties, then what is the solution? Then is the auditor expected to go to the third party's premises and verify it? It may not be possible. So, therefore, when the inventory is with the third party, auditor will not conduct the physical verification. Rather, he would obtain the confirmation from the third party with whomever the material is. And he will also inspect the documents at the company's premises, like basically the delivery challans and all, as a proof that this material has been gone over there. So, these two things. In this confirmation, if the material is with the third parties, physical verification is not expected, but the confirmation, getting a confirmation, written confirmation is mandatory. So, these are all the points as far as inventory is concerned. Now, let us look at the questions. The first one. Now, as I said in this, from examination point of it, I will connect. Otherwise, this standard basically you are already comfortable. Now, at final level, what questions he is asking? 2 points. One is on the attendance. That is, attendance is mandatory unless it is impracticable. And the second one is management instructions. So, it is the duty of the auditor to ensure that the management instructions are complied with. Now, look at the test your understanding case scenario, which is given in your study material. This Prabhajot has planned to observe physical count of inventories at the plant of a company located in the remote area in the state of Uttarakhand. Then, as a part of stat audit exercise, few days before the completion for the year, he already informed his intention to the management that he is planning to visit, because he wanted to go there, because attendance is mandatory, he wanted to visit the plant. Now, he plans to inspect the inventories, because he has to inspect the inventories and observe the count process and perform test counts. That is what an auditor should do it. The management also has made all the necessary arrangement. The management is very supportive. They made all the arrangements. However, an agitation in Himalayan hills started on 28th, because they have planned it on 29th, but one day before their scheduled visit, there was an agitation in that area, and for announcement of whatever is the reason, conservation of agricultural land, whatever it is, but there is an agitation. Because of this agitation, the plant is not accessible. That is, the auditor could not go through any other mode because this because of this agitation, they have blocked the national highway which is leading to that plant site, and there is no other mode. So this will come under impracticability of attendance. Now he is asking what an auditor should do, because now that he can't reach the plant, what is that he has to do? So that is where we will go back to it. Wherever the physical verification is becoming impracticable, auditor should perform alternate procedures and evaluate the impact of it if that is not possible, and then based on the impact modify the report if it is required. That's all. So you get 5 marks for knowing this small point. Now look at another previous year question which is asked in November 23 as well as in RTPs and May 21 as well. PQR Limited supplies uniforms across the country. The company has 4 warehouses of different locations throughout India and 5 warehouses at the borders. The major stocks are generally supplied from the borders. So that is, the stock at the borders is the critical item, and PQR Limited appointed STU and Co to conduct the audit for the financial year. Now you is the partner and to attended the physical verification conducted throughout India, but could not attend the same at the borders due to unavailable. But is that border material is insignificant? No, border material is significant. That is what he is saying. Major stocks are at borders and he couldn't cover the borders, he covered rest of it. So then advise what he can do for it. Logic is simple. Now why he could not do it? Because of impracticability, you can say unavoidable reason. So while answering this, you have to quote that in accordance with SF 501, it is mandatory for the auditor to conduct the physical verification, and while doing so, he must attend the physical verification, and if he is not able to attend the physical verification due to any impracticable situations, then he must perform this 3 scenarios. That is how he will have to do it. So this is what is the question that you get in it. And the other question is on the written instructions. What happens if it is not complied with? Let's say during an inventory count, management provides written instructions, but the count team, management has given instructions, but the team which is counting is not following them consistently. The team is not following. So under SF 501, what an auditor should do? So complying with this is mandatory. If they are not following, then the auditor will modify. So let's see. When they are not following, the answer is accept the final inventory sheet because instructions were issued. No, mere issuance of instructions is not sufficient. They should gather, and since they are not following instructions, auditor will not accept it because the instructions are not complied properly. And then observe count procedures, evaluate management instructions and perform test counts. This appears to be slightly logical as per as our. So let's say this is the answer, but we will have to, in all MCQs in your exams, you have to read till the last one. Though we are already sure that B is the point, but we must read till D under elimination method. Now the third one, avoid attending the count and rely on post year end sales. Why avoid? Auditor must attend. So this is straight away it is wrong. And conclude that the inventory is misstated. Now how can you conclude it? Without proper evidence, without even performing any further procedures, how will you conclude? So as an auditor, for good right decision or a wrong decision, whether you agree with the client or you do not agree with the client, you must have SAEE. So therefore, by eliminating, B would be your answer. So still, even if they are not following instructions, I must observe this procedures and all this. So going back to it, this SF 501 covers 3 items. Now let's repeat it. What are the items that SF 501 covers? Inventory, litigation and claims, and segment information. Now in this we have covered inventory. Now let us move on with litigations. In the litigations, the basic objective of the auditor is to see that all litigations have been disclosed and provided for in the books of account. But the question is, how is it possible for the auditor to know all the litigations? Is it practically possible? If the management communicates, it's all right. But what if the management does not communicate? That is where we are discussing on this audit procedures. What an auditor should do. Point 1, simple step, inquire with the management. That is, what do I inquire with them? I should inquire regarding existing lawsuits, that is, what are all the current cases, and potential claims. What are the claims that you are intend to make, and what are the legal disputes around this one? So, point one is discuss with the management, but they may or they may not share you everything. That is why, as a second step, you review the minutes of it. You review the minutes of it. So, minutes of what? Minutes of board meetings and the minutes of committees, audit committees or board committees or various committees, relevant committees, you verify. And even in the minutes, they might not have recorded. So, therefore, as a third padding, what you are going to do is you are going to verify the legal expenses account. So, that is any payments made to the lawyer, then you will take out that list, you will take out the ledger, you start questioning the management. If so much payment is made to the lawyer, then why is it being made? What is the background scenario for this? That is why reviewing it. And as a step number 4, we will get a confirmation from the lawyer. So, whether he is an internal person or external legal counsel, whoever he is, auditor would get the confirmation from him. So, these are the 4 steps. To repeat it, what an auditor should do: first, management inquiry, review of the minutes, and review of legal expense account, and for fourth one, confirmation from the advocate, that is the lawyer's confirmation. These are the 4 things that auditor should do. But what if this legal, there are 2 things that will come. What if the auditor is not allowed to take the confirmation from the external person, because you need evidence from the external person? What if he is not giving it? Point number 1. And point number 2, what if the lawyer himself refuses? So, your job is simple. You need to gather the audit evidence. If that is not possible, you will simply try to perform alternate procedures. If that is not possible, evaluate the impact. If then you straight away modify the report. That's not your problem. If the lawyer is not sharing or the management is not allowing, you got your duty to do. That's all. So, these are the points that are important as far as litigation. So, from exam perspective, what are the audit procedures, and what if the legal counsel is not responding? So, this slightly overlaps with external confirmation. So, therefore, whenever we go to that chapter, we will try to cover that as well. Then the last piece of it, segment information. So, since this is done based on the accounting standards, the relevant accounting standards, so therefore, what an auditor should do? First, he should perform, or he should gather this sufficient audit evidence, SAAE, sufficient and appropriate audit evidence, with regard to what are the reportable segments. Say, first, whatever the segments they are reporting, are these complete, or are there any other reportable segment which they should consider? And then measurement of the information. Whatever the information they are giving, is that correct? Measure that one. And then compliance with regard to the applicable financial reporting framework as far as disclosures are concerned. So, this is also basically a C category item, and in the litigation, I would say B category item from the exam perspective, but what is repeatedly questioned is your A category item. So, this SA 500 and 501 are the very basic standards, but in your final exam, the reason for spending 1 hour on these 2 base standards is you are being questioned like here on these 2 standards. So, without touching the basics, we can't get into the details of it. That is why we are trying to refresh first on all the fundamental understanding, and then we are trying to get to the moot points of it. So, from exam perspective, what are the important points under 501? Attendance for the auditor for the physical verification, is it required? The answer is yes, it is required. Is it mandatory? Yes, it is mandatory unless it is impracticable. Now, due to floods or due to agitations and all, it has become impracticable. What should I do? Perform alternate procedures, evaluate the impact, and modify the report. That's it. So, straight and simple for it. And then another point is, for doing this physical verification, see whether the management has prepared the set of instructions. If they have prepared, then how is it being followed at the ground level? That is the count team. Are they following? If they are not following, Same procedures. Perform alternate procedures, evaluate the impact and modify the report. These golden steps are relevant for you in answering in multiple standards. So, with this SF501 also comes to an end. Now, let's move on to the next. Now, before we close SF501, let's have a look at this case study. Now, on reviewing legal expenses, because this is one of the audit procedures that is required to be performed while evaluating the completeness of the litigations. So, here the legal expenses were reviewed, and in that process the auditor CA Sunita of this who is the auditor of that company finds that legal fees amounting to 10 lakhs was paid to a B George. Now he is a reputed lawyer, and during the year, on inquiry with the management regarding the purpose of it, the management didn't give proper answer. They gave evasive replies, so they were not responding properly to it. So she is not convinced. So what she did, she finds it proper to correspond directly. She wanted to directly contact with the lawyer. Can she contact with the lawyer? That is where we said lawyer's confirmation. The auditor can seek. But in this case, what she did is, she obtains the address and the email ID of the lawyer from his professional services bill. So, she gathered the address, contact details of this lawyer from the bill that he had submitted, and she shoots off an inquiry letter asking for the status and all. She wrote directly to the lawyer. So, is her approach proper? Now, no doubt SF501 says you must consult the lawyer, but not without management's permission. So, management's authorization is mandatory, and what she did here, though the final step is in accordance with SF501, but she shouldn't have contacted directly without taking the approval from the management. So, whatever she did is not proper. She should have taken the proper approval from the management. So, this is how you get your questions to test your understanding on the concept basis of. Yeah, let's continue with this SF505, the third standard. So, we discussed SF500 and then we discussed SF501, and now we are moving on to SF505, external confirmation. What do you mean by external confirmation? Any evidence obtained by auditor, that is as a direct written response from the third party to the auditor. So, to cut it short, who is responding to whom as an external confirmation? This is the third party is responding to the auditor. That is what we call it as an external confirmation. It is obtained directly as a written response from the third party to the auditor. That is what is this. Then, as I told you earlier, your standard is not complete in its detail. So, let's go and understand the fundamental types of it. What are the types of confirmation? The types of confirmation are of two types. One is positive confirmation and second one is negative confirmation. What do you mean by positive confirmation? That is, a positive confirmation is a confirmation where you expect the party to respond. That is, you respond whether you agree or disagree, then it would be called as a positive confirmation. And a negative confirmation is that kind of confirmation where the response is expected only, mind you, I am repeating, only if the party disagrees. That is, if the party is agreeing, you don't want any further assurance that yes, we agree. But if the party disagrees, then you want a response from them saying we disagree with this because the balance as per so is so and so and all that. That is what is positive confirmation and negative confirmation. From exam perspective, this is important. How you identify what type of confirmation? If you want the response in both the cases, whether you agree or disagree, that is what we call it as a positive confirmation. And you want that confirmation only when he disagrees, that is what we call it as a negative confirmation. Now, how he can ask you? Look at this RTP May 25 questions. That's why it looks, topics may look simple. You must be wondering, why am I dragging for the simple concepts for so long time? But it is still required. So, though I understand and appreciate the fact that you have already covered them in intermediate, but it is still there in the final syllabus. So, when it is a part of final syllabus, you must learn one more time. Now, look at it. during the audit of the financial statements of Lux Limited, year end and all this, now whatever the year, the CA, now Suyash, requested external confirmation for certain trade receivables and trade payables, as in this one. He sent confirmation request to a debtor for a balance of 15,50,000, which is outstanding for more than, and insisting a direct response to the auditor confirming the agreement or disagreement. So, to the debtor he want the confirmation whether he agrees or disagrees. So, and whereas look at the continuation, and he sent a confirmation request to a creditor with an outstanding balance of 13,25,000, and where he is requesting a response only if there is a disagreement. Only if there is a disagreement. But in this case, whether he agree or disagree. Then he is asking what are the types of confirmation request he sent. It is simple. When you want a response whether you agree or disagree, it is called a positive, and when you want that party to respond only when he is in this one, then disagreement, that is what we call it as a negative confirmation. So, this is how you can get. So, it is important and you are being questioned on the types of confirmation. Then it is a simple standard. So, then what are the examples? Examples of where do we get these kind of confirmations? Simple, bank balance confirmations. This is the most common aspect of it, and trade receivables, and then loans, wherever you get the confirmation from the lenders, and inventory, which is with the third parties. That is what we just covered in SA 501. Is it mandatory for the auditor to visit the third parties to get the confirmation? Not required. So, physical verification is not required, rather confirmation is required. And then any legal matters where we would be taking the confirmation from the lawyers. So, these are the examples of it. And then what are the procedures? Now, this one, take 3 stars, mark this as A category. This is important, and the definition is also important. Mark this as A category. This objectives and all you can take it as a C category. Examples only once he had asking, even if he asks you can answer. So, therefore, I would still mark this as a C category item over here. But procedures, because he is asking, like if I take you to the question, just a second, see here. So, this question is being asked for 5 marks. So, and even in 23 and all this, the question is simple. What are the procedures? External confirmation procedures. So, it is a direct question. So, therefore, you have to give importance to it. Then it is simple. What are the procedures? So, what matters to be considered while auditor is performing this external confirmation procedures? First one, determine the information to be confirmed. That is, what is that you want the confirmation? Is it the balances? That is the receivable balance or payable balance or the bank balance? First, find out what is that you want. So, determine the information to be confirmed. Second one, who is the appropriate party to confirm it? Is it the customers? Is it the suppliers? Is it the bank? Is it the lawyers? Or so find out who can give you, who is the appropriate authority to confirm you the confirmation. So, first is what is to be confirmed, then second one is whom should you approach to get that information. Then third one, design the confirmation request, that is, do you want it a positive or do you want it a negative? We have already talked about. Positive confirmation is a confirmation where you expect the party to respond whether he agrees or disagrees, whereas negative confirmation you expect the party to respond only if he disagrees. So, you will discuss. And then finally, maintain the control over request, that is, how many people are sending, how many people are responding. So, that control you will have to keep it. So, these are the 4 steps. To repeat it, what do you mean by? Let us go back to it. What is the standard number? Standard number is SF505. What does it deal with? It deals with external confirmation. Now comes the question, what do I mean by external confirmation? It is the audit evidence. It refers to audit evidence obtained by the auditor directly from the third parties. That is what we call it as a external confirmation. Then what are the 2 types of confirmation? Positive confirmation and negative confirmation. when do you identify that it is a positive confirmation? That is, if the response is expected, whether the third party agrees or disagrees, then we call that as a positive confirmation. But if you expect the response only when the party disagrees, that is what we call it as a negative confirmation. Then what are the procedures? First, determine the information, what is that you want. Then second, who can give you that information, who is the appropriate authority. And third one, what is the type of request that you want to send, positive or negative. And then maintain the overall control over the request. That is, whom are you sending, what is he responding, is he confirm, is he agreeing with your request, or is he disagreeing. So all those points would come into it. So these are all the 4 steps. But one major point, so this also from exam perspective, take 3 stars, mark that as A category. Now this is the most important. That is, and this, even at inter level this was important, and even at final level this paragraph is important. That is, I'll put that from a basic perspective. Is it mandatory or optional for the auditor to obtain confirmations? It is mandatory. Auditor must get that. Then the requirement, then can the auditor directly approach the party to get these confirmations? That is where they say that no, you require management approval. So if without management's approval, you are not supposed to send this directly to it. That is what we've discussed in the case study earlier, where an auditor want to shoot out to the lawyer by picking up the details from the bill that he had submitted. So that kind of direct approach, bypassing the client, not acceptable. So we have to approach through management. That is where two contradicting. ICS is you must collect it, and then with the same tone they say that, but you require approval of the management. But I wanted to collect it, but the management is not allowing me. Then what do I do? That is where this paragraph comes into. So what if the management refuses? This is the buzzword. What if the management refuses? If the management refuses, the auditor will inquire why. Why they want you to not to send this confirmation. Then evaluate whether the refusal indicates a fraud risk. That is it suggesting any fraud risk over there, or is it an increased risk of material misstatement? So why the management doesn't want to send it? Because there is a misstatement in it, or because there are frauds in it which they wanted to cover? What is the reason? And third one, perform alternate procedures. Whatever is your conclusion, perform alternate procedures, and based on that communicate with those charged with the governance. So regarding the management's disapproval, and at this stage, between management and those charged with the governance, who are the higher authority? Obviously those charged with the governance. So if the management is not allowing you to take it, they say that then approach those charged with the governance. Maybe they understand your requirement and they can instruct the management to allow you. That is what we are trying to do it over here. So to repeat it, is management's approval, learning this from a conceptual perspective. Is obtaining external confirmation mandatory? The answer is yes. But can I send directly to the third parties? You can send directly, but only with the management's authorization. What if the management is not authorizing? That is what we are trying to do. But since this is such an important concept of it, let us look at it from the chat perspective now, so that this will become more easy for you to connect. If the management is refusing, the auditor will inquire for the reasons. That is, why? Why the management? What could be the probable reasons? One, there may be a legal dispute, and second one, ongoing negotiation. If these are the scenarios, obviously the client will not permit it. So, but whatever is this problem, but as an auditor, yes, at least there is no fraud risk. So if these reasons are not there, but still client says don't approach them, then there is a clear fraud risk. But if these are the reasons, because the legal dispute is already going on, and therefore client don't want you to send any communication, understandable. That is why it is reasonable. Because it is reasonable, what should I do? I will perform alternate procedures, that is verifying subsequent transactions, etc. If that is possible, all right. But if that is not possible, then what do? I communicate with those charged with the governance and modify the report. This is what I will do. And same thing, whenever I inquired for the reasons, I somehow feel that the reasons or the excuses the management is giving are unreasonable. That is, they don't seem to be correct. So then I suspect a fraud risk possibility over there. So therefore, I communicate that matter to those charged with the governance, trying to seek their help in resolving it. If they help, it is all right. But if they are also not supporting, then I will straight away modify the report, because obtaining external confirmation is mandatory for me. If I am not allowed with that, then I will modify the report. So this is what is an concept on this particular topic of it. Then the last discussion on this is, what do I do if there is no response? So because you are sending to third parties, but third party is not under legal obligation to respond you. He need not respond. He may respond or he may not respond. So that is where we get into the topic of, what if the party is not responding? Now, in that case, we need to see, when you say he is not responding, the base point, is he not responding to your positive confirmation, or is he not responding to your negative confirmation? Imagine if you have sent, what you have sent is a negative confirmation. Then in the negative confirmation, you want the party to get back to you only if he disagrees. But if there is no response from him, which means he agrees, that is, no news is a good news. So therefore, when there is no response to your negative confirmation, it suggests an agreement, and because it suggests an agreement, no additional procedures are required by the auditor. This is simple case. But you sent a positive confirmation, but there is no response from the party. What do you do? So you try to perform alternate procedures. If that is not possible, then it would amount to limitation, because it is mandatory for you to obtain the external confirmation. Then what do? You modify it. That's all. So the chart that you are seeing is what he is asking as a, what do I do if there is no response from the third party? So if you see here the questions directly, I have underlined, you can read it, but in the interest of time, he says that you have sent some communication, but the parties have not responded. So he is asking, then how an auditor should respond with regard to non-receipt of confirmation. So if the confirmation is not received, then you have to see, did he send positive or did he send negative? In this case, he had sent negative. So because he had sent negative, then it suggests an agreement, and therefore no need for additional procedures. Otherwise, you will have to perform additional procedures. So this is what is the brief summary of your SA 505. Now let's touch one more time. What are this standard talks about? So this standard talks about obtaining external confirmation. Simple summary. Who is obtaining from whom? The auditor is obtaining from the third party. Now, I will go little zigzag to give you conceptual. Now, is it mandatory for auditor? Because when all the books of accounts are there and he has got 100% right to it, why he will have to write to a third party? So, is it optional or mandatory? It is no longer optional. It is mandatory for auditor to obtain these confirmations from third parties. Now, what are the examples? Examples, you can take many things: bank balances, trade receivables, loans, etc., inventory with the third parties, external legal counsels. So all that would become your examples. Then comes the main one. Leaving aside this essay type question, what are the procedures that I need to perform? Now, we'll come to it as the last step. When it is mandatory on my part to get it, now do I need to contact the management, or can I just go to the third party directly and get it? ICI is strict on this. They say that obtain the management's authorization. But what if the management is not giving permission? So if the management is not giving permission, then inquire for the reasons. That is what we have learned through a chart over here. Inquire for the reasons. And once you look at the reasons, you may find it reasonable or you may find it unreasonable. If you find it reasonable, yes, that is, you agree that management has some reason. What could be that reasonable grounds? Because the legal dispute is going on, or there is a negotiation, ongoing negotiation. There is a probability of a one-time settlement or something like that. So in such a scenario, the negotiations are already on with the party. So therefore, the management may refuse to send any letter at this juncture. So then what I should do? Now I should perform alternate procedures. What could be that alternate procedures? Verification of subsequent transactions. If that is possible, all right. But if that is not possible, that is there are no subsequent transactions, then what do I do? Then communicate with those charged with the governance. They may instruct the management to remove the limitation. Otherwise, if that is not done, modify the report. That's all. And then one last question. What it says is this negative confirmation is the most easiest one, because if the third party doesn't respond, then you can treat it as an agreement and there are no further audit procedures. So there are more chances that the auditor may go for a shortcut in sending negative confirmation. That is where ICI is saying don't send negative confirmation alone, and you trying to gather audit evidence only because of negative confirmations is not acceptable. First, from exam perspective, take 3 stars, mark it as A. So if you look at it, generally the auditor should not use as a sole audit evidence this negative confirmation. It will be permitted only when all of the following are present. What are the conditions? Low assessed risk, that is the risk of material misstatement is low, and large number of small balances, that is indirectly you are talking about AB in the ABC analysis, C category items like say packing material and these kind of stuff. So large number is large but value is small. So then C category items, then negative confirmation would be sufficient enough. And very low expected exception rate, that is you expect that the exception, that is where there will be a difference between what is recorded by the client and what is confirmed by the third party. To put it simple, you don't expect any variance between the client data and the third party data, then negative confirmation is sufficient enough. So in this third scenario, as an auditor, you are more confident of your client's data, and because of the internal controls that is having, you believe that the probability of my client's balances challenged by the third party is very rare. So that is, you trust your client. Then negative, but still I have to get it. So that is where a negative confirmation would be sufficient enough in it. And the last one, no reason to believe that the recipients will ignore the request. That is, when you are 100% confident that the recipient is a professional and they are not going to ignore your request. If you are so sure of it, they will read and respond. That is, you said some balance and you are confident that they will read it. Now they read it, and if they are not responding, then what do you mean? They have agreed. So they have agreed to your balance. So only when all these conditions are satisfied, you are allowed to send a negative confirmation. Otherwise, as an auditor, I cannot use this negative confirmation as a sole audit evidence. That is not agreeable. So these are all the points under this standard on external confirmation. So to sum it up, we have discussed as of now 3 standards: SA500, SA501 and SA505. So with this, let us give a pass to this topic, to this chapter for a while, and when we resume after the break, we would be continuing with the remaining 3 standards of it. See you after the break.